Good evening, everybody, and welcome to tonight's GLOBIS seminar. My name is Zachary Kraus, and I am the Extracurricular Program Coordinator for GLOBIS University, Tokyo, Japan. And it is my pleasure to welcome you to tonight's GLOBIS seminar, Lessons from 50 Years in Venture Capital with Alan Patricof. Our seminar tonight will be featuring Mr. Alan Patricof. He is the co-founder and chairperson of Primetime Partners, with a 50-plus year career in venture capital. Alan has been instrumental in the growing of the venture capital field from a base of high net worth individuals to its position today with a broad institutional backing, as well as playing a key role in the essential legislative initiatives that have guided its evolution. Alan founded Apax Partners, a leading global private equity advisory firm, and co-founded Greycroft, a venture capital firm focusing on investments in the internet and mobile markets. He has helped build and foster the growth of numerous major global companies, including, and among others, American Online, Office Depot, Cadence Systems, Cellular Communications Incorporated, Apple Computer, Four Systems, NTL, Interlinks, Audible, Axios, and Wondery. During this period, he also supported Yoshito Hori, founder and president of GLOBIS University, to launch Apax GLOBIS Partners and Company, which became the foundation of GLOBIS Capital Partners, the largest independent venture capital fund in Japan. Following the keynote tonight, we will be joined by President and founder of GLOBIS University, Mr. Yoshito Hori. Mr. Hori will conduct a short interview with Mr. Patricof to help deepen our understanding on today's subject matter. We will then conclude the session by answering questions from the audience. With that, I will pass the floor to you, Mr. Patricof. Please take it away.
Thank you for having me. This is a big occasion for me. I remember clearly my first days going to Japan after having been visited by Hori's son in New York, and the formation of what is now GLOBIS Capital, GLOBIS Venture Capital, which in the very, very early days of venture capital in Japan. And it reminded me of actually the very early days of forming a venture firm in 1970 in the United States. There were many similarities in the fact that it was a nascent industry, a lot of naysayers around, not a lot of risk takers around, and a lot of skepticism as to whether the concept of venture capital really had a future in the society. And 50 years later in the United States, and certainly 25 years later in Japan, I don't think there's any question that venture capital plays a very major role, as it does in almost every country in the world. It's interesting that in recent months, well, maybe I'd say years, but really in recent months, we in the United States have started investing in venture capital activities in Africa, which I know I tried to promote 5 and 10 years ago, and no one was willing to do it. And now everybody is turning their attention to Africa with opportunities. As background to the reason for this talk, dialogue, question and answer tonight is that I have recently written a book, my first, and I assume will be my last book. I don't have an intention of doing another one, entitled No Red Lights, which you saw it held up a little while ago. It's interesting, the reason why I wrote this book and for whom I wrote the book. And I wrote it over the last couple of years. I started before the pandemic, and as the idea percolated, and I wrote it for 2 reasons, and it's applicable to this audience as well as any other audience. I consistently over the years have noticed how many younger people, and I won't define young, you can say in their 20s or 30s, is a pretty good general idea, become very myopic in their lifestyle and get very focused on what they do on a day-to-day basis, whether it's in the financial world or the legal world or even in medicine. Whatever it is, they become so absorbed in the activities that they're involved in day to day that they don't smell the flowers, taste the opportunities. And my life has been, and that's what has made it interesting enough to be a book that people are buying, is I have no red lights in my life and never have, and to this day I don't have it. And that obviously that's where the title came from. And that is, I wanted to encourage younger people to say, don't get caught in a rut, don't get caught in one focus in your life, but taste politics, taste art, taste theater, music, dance, travel, whatever the opportunities are that come to you, don't let them pass you by. And in fact, seek them out. And so I wanted, on one hand, to have a bifurcated audience that would, from the younger people, have more openness to being curious about the opportunities that they will experience and as they grow in their careers. And on the other end of the bookend, I wanted to encourage older people that it's never too late to start something new. They should not think at a particular age that it's time to cash in their chips and relax their lifestyle, but rather to think about the later part of their life as a big opportunity. I am very proud to say that I started my second firm. My first firm, Apax, I started, which was called Patricof Associates. When it started, I started in 1970. My second firm, I started in 2006 at age 72. And that's been built up to quite a sizable level. And at age 85, 2 years ago, I decided to start yet a new firm, which is called Primetime Partners, which is focused on products, services, experiences, technologies for what I call the ageless generation or generations. People don't realize that there will probably be more people in a country like Japan, the United States, Europe, that will be over the age of 60 than there will be under 18. And they need lots of things to service them that are different than what people had earlier in their lives. And so I was seeing a lot of friends of mine who were retiring at age 60 or whatever the legal requirements were of their firm, or just had felt it was time to go and start relaxing. And I, 10 years ago, heard a gerontologist, a person who deals with the elderly, give a speech, well, maybe it was 15 years ago, talking about what life expectation was and how long we could physically live. And they said it was 114. I think that same lecture would be given today and say it's probably 120. And the only reason people don't live that long is because they chip off different things that happen because of various illnesses and accidents that happen, and each one takes something from that long-term objective. And so I've had many of those medical and other irritants on the way, and yet I'd like that idea of 114. So I set a goal of 114. I've been saying that for the last 10 or 15 years. And whether you believe it or not, it's not important. But if you have a mindset that you're going to have a long life ahead of you, and you're coming to the later part of your career, you realize that a person 60 really has only lived half their lives. So to go back to the purpose of the book was to really inspire people and the young end to take advantage of opportunities, on the older end to think about what their next chapter in their life could be. So I wrote this book, and it's the way I have lived my life. I wake up every day and try to do everything. I do exercise. I do this. In case you don't know, it's 7 a.m. in New York. I do conference calls. I have meetings. I go to conferences. I go to ballet. I live a very, very full life, and I'm now, it's 2 years later than when I started Primetime at 87. And I've set forth a goal of going to something in the United States called Burning Man, which is very, very unusual, held at the end of August. And I am also, having run the marathon 5 times in the 1980s, I've decided to jog the marathon, New York Marathon, in November. But it's just, I just say these things because life brings a lot of opportunities. I was fortunate enough to pick a career, venture capital, which is a business where I am in contact all the time with young people and young ideas, and have managed to build a career in a very exciting field, which gets me to a couple of the things that I point out in this book, and that the way I live my life, everything in life is cumulative. We tend to think of things as in isolation, but the fact is that what you did in your lower grades in your school, the lessons you learned, the people you met, the experiences you had, the jobs you've had, life is cumulative, and you get to where you are in my stage in life, or when I did the other activities I formed. And by the way, I started my first business after 4 jobs, which were increasingly interesting, and where I changed jobs after college because I saw bigger opportunities, again, fitting the style I'm talking about of taking on new challenges. And I say in the book that when the office you're sitting in the color seems to be very bland, very ordinary, maybe that's the time to move on. But I started these various careers I've had because I saw new challenges. And as many of you know, in venture capital, you have to raise new funds every so many years. And I have a favorite saying, which is in regard to this concept of life is cumulative. My last fund I raised in 3 months, and people say, God, how could you raise a fund in 3 months? And my answer is always the same. In this case, 50 years in 3 months. And it goes to the point of, when you build a career, it increasingly stays with you and helps to build a reputation, which becomes very important as you mature in whatever you're doing. So, one takeaway is that life, as I say, is cumulative, and that's how you build a reputation and how you treat people. I wrote a blog about 8 or 10 years ago. I think you can probably find it someplace. And the title of the blog was a very unusual one. Every day of my life in the last, 10, 15, 20 years, every day, without exception, someone comes up to me and starts out the same way. You don't remember me, but, and it's you don't remember me, but you invested in my company. You don't remember me, but I worked for your first firm. You don't remember me, but You answered my telephone call when no one else would. So I decided to write a blog titled "You Don't Remember Me, But," and it was dealing with this concept of how you build a reputation so that when those people come up to you, they don't remind you of something that you would like to forget. And as part of that, being in the venture business is learning how to say no in a way that you don't hurt someone's feeling, because it's important to remember that in the venture business, no matter how crazy an idea is, or it seems to be, the person who has it really believes it's the best thing, the most important thing in their life. And it's when you turn it down, it's like saying their child is not pretty. So how you treat people in your life, how considerate you are. I have a policy. I've always practiced it. I return every phone call I get within 24 hours. I still write handwritten notes. And I try to remind myself every day that treating people well is important to building a reputation and a career. Why I went into venture capital was because I was curious. That I think is the most critical characteristic for someone in venture, is to wake up and look around you at new things, old things, read every opportunity, everything you can see, that and follow it through to find out where it comes from or what it's about, and try to spot early trends as new developments are taking place, and they do every day. There's something new happening in the world, and I think you have to be someone who's very aware of what's going on. So I'd say curiosity is the single most important element. Obviously, having skills, financial skills are important. Good judgment is extremely important, because venture capital is not a science. It really is an art. And it's over a period of time, it develops this concept of pattern recognition, and something you've seen similar before. No two opportunities are the same, but there are similar characteristics, and you can spot that in entrepreneurs who are starting something, and what their skill level is, what their passion is, what their determination is, how skillful they are in building a team. And I think those are the characteristics that will make someone into a good venture capitalist. I also, again, it all fits together. I am someone who still to this day attends conferences. I attend whatever sessions like this, and whenever I address our own internal meeting every year of our whole group, I always say the same thing, and I'll say that to you here also. If you go to an event like today's discussion, if you come away with one good idea, it's worth the effort. But unfortunately, most of us go into conferences and or panel discussions or meetings, and are trying to absorb a lot. I always say just one good idea, one good relationship you develop, one good idea you walk away with, one new concept, and that connection. I encourage very strongly all the people who work for our firms, when they go places, to always, there's a great tendency to stick together. Everybody who knows each other wants to congregate. And I am almost a policeman when I'm around, is saying, that's the opportunity to make new friends. Go put yourself in an area where you are uncomfortable, and that's the way you build relationships, because the people you meet on your way up are going to be with you for your rest of your life. I'm not going to cite names, but there's no point to it. But people I met when I was in my early 20s, I still have contacts with today. And many of them are the heads of corporations, heads of banks. And we were all very early on in our careers when we met. And it's also important to develop good relationships with the companies you're investing in. I'm going to a birthday party tonight for someone who was actually, just coincidentally, the first company I ever invested in 1970 in the venture world. And obviously we still know each other after over 52 years. So relationships are important. Exploring opportunities are important. And, along the way, my career, you heard a lot of names, all of which were true, but there are also a lot of names that weren't mentioned that are failures. Failure is part of this business. Risk-taking is part of this business. And you can't be afraid to take risks, and you have to expect the failure rate is going to be high depending on what stage you get invested in. For example, the firm I've started now at Primetime is all startups. And so, we have to equate the risk and the potential reward, as opposed to being in the private equity business where there's a whole different set of characteristics. The reason I left Apax was Apax had morphed from a venture firm into a private equity firm. And the characteristics in a venture firm are really more early stage judgment, market extrapolation, looking at address markets, expecting for growth rates, as opposed to private equity, where it is more of a financial business with discounted present value calculations, and it takes on a different nature. It's more debt and equity financed as opposed to equity only in the venture business. And I just wanted to taste again the challenges of venture investing, and that's why I started my second firm, Greycroft, which is a venture, much more of a venture operation. And now Primetime is purely in the startups. And when you invest in startups, you have to accept a different kind of risk profile. So just also to, because we're going into the next phase of this conversation, to give you an idea that, I don't make all smart decisions. One of the stories I tell in the book is the fact that when I was living in New York, and one of our people in our California office in the 1980s told me he was what I call a counterculture person. He was starting the vegetarian vegan movement. He was going to these scientific conferences that were dealing with the third world and very spaced out. And he came up with this idea of a small chain of 3 coffee shops in Seattle, and wanted us to invest in this coffee shop chain. Of course, as I said to him at the time, New York had 2 coffee shops on every street. Why did we need a new one? New one? And we turned down what, of course, is now Starbucks, which probably has 15,000 outlets today. But I didn't see I was too parochial in seeing the opportunity that Starbucks was a way of life. And it taught me the lesson to get out of my chair and make sure I go and see something and really have a full understanding before I turn something down. And there have been other instances on the way when we made similar mistakes. I get a lot of credit for having invested in Apple. I invested in Apple the year practically almost a year after it started and 2 years before it went public. And I don't want to present, I always say this, I wasn't any genius. I say it in the book. I just had read a lot and I was aware of what was happening in personal computers, and Texas Instrument and Commodore business machines had started up their small personal computer, which was almost a toy. And when I had read a lot about what was going on, and had seen that Apple was just starting up, by chance I was offered an opportunity to invest, and I jumped at it and invested at that time. That's all that was available, was $315,000. And when it went public, we distributed it to our shareholders. So I have no idea. I'm sure no one holds it today. But as I was writing this book, I thought it'd be interesting to compute what that $300,000 was worth today. And it comes out to 7 billion. So it's a testimonial to buy and hold if you have a good company and you have confidence. But there are other stories like that in the venture business, but they're few and far between. So I think that with these little stories and background of the book and why I wrote it and what's happening in my life, and also being, most importantly, is encouraging you, whichever end of the spectrum you're on, the earlier or the later, don't keep your eyes open and for opportunities. And remember, if I'm even close to being right, almost everyone on this phone will live to be over 100. So there's a long, long life ahead of you, and you want to build a reputation, and you want to be aggressive in seeing and taking advantage of opportunities and living a multi-dimensional life. So with that, why don't I, Yoshi, you and I have a conversation and take it from there, if that's okay with you.
Okay, Alan, thank you very much. And I'm so happy to be able to speak to you in this way. And I remember that the last time we had this kind of seminar together, maybe it was 1999 at the press conference in March in Japan. And then, so it's been a long time since I was able to talk to you in public. And I'm so happy to be able to have a dialogue with you. I read
Yoshi, they showed the picture before. That must be the picture from 1999. I was looking to see if I changed.
Yeah, you should have changed the picture. That's what I was going to talk about. I read this no red light, but there's no picture of me. This is a picture of Japan, but somehow, my picture was in it. But anyway, let me just talk for 5 or 6 minutes about the relationship with Apax and Alan from my point of view. I met Alan first time in 1998 in April in New York. The reason was that Alan and Apax was trying to find a partner in Japan, and they hired a professional to search for Japan, and they found us. And therefore, it was in 1997. And it was a time of the Asian financial crisis. At that time, GLOBIS has had very little fund of $5.4 million, roughly 540 million yen, small fund. And then after the financial crisis, we knew that we won't be able to raise that much money. And however, looking at Apax, we were so surprised to see Apax has raised more than several $1 billion, and there are so much learning to be done. And at the same time, you're able to find some good knowledge from them. So we got interested in tying up with Apax. And therefore, I, together with Soichi Kariyasuno, who became the chairman of Japan Venture Capital Associates later on, and then flew to New York in April to see Alan. We prepared 74 pages presentation, and we started presenting that to Alan, and roughly about 34, 35 pages later, Alan stopped us and said, we found it, and this is the guy. That's what Alan said, and suddenly he turned on the video conference, and then we got connected to UK, Ronald Cohen, and Maurice Chenio in France. And then I talked to them over the video conferences, and I decided I had promised to visit them in May. So I visited them in May, and then we had several discussions going on the way. In September, I was planning to come with my wife, Mizue, to New York, but somehow Mizue has forgotten about the passport duration, and therefore she was not able to come in. And Alan was quite furious about the fact that she wasn't able to come. And however, Alan came to Japan in October, and we had various discussions. He had done due diligence on us. He has met lots of partners and associates of us and GLOBIS side, also venture capital side. And we reached basic understanding in September and October. In December, we started actually training. During the part of the promise is that all of us do 2 months of training in any of the Apax offices. So I chose Europe because I wanted to know what is going on in venture capital field in Europe. So I spent 1 week in Germany, 1 week in Israel, Tel Aviv. Germany is Munich, and UK, London for 6 weeks. Then in 1999, Apax and GLOBIS signed a joint venture agreement, and then we have decided to become Apax GLOBIS Partners. In March, we had press conferences, and then afterward, Alan Apax has introduced us lots of investors, and we started roadshow and fundraising. And in September in 1999, we had the first closing. In 2000, we had a final closing with 20 billion yen, $200 million fund. Then our joint venture started. I have learned greatly from Alan, as Alan was sitting on all the investment committees, so we had to do teleconferences all the time we make decisions. And Alan was so good enough to question us and ask us lots of questions. It was very difficult to go through the investment committee because everything is being written down in English, and also it has to be done in English language. At the same time, the contents and also the preparation of documents, and then also meticulous attention to details are always required. And we have made lots of investments, but in 2001, 3 things happened which changed our relationship. Alan decided to leave Apax, and then Apax has decided to focus on private equity. Those 2 Alan has mentioned, and Apax decided to become one global firm. The slogan at that time was becoming Goldman Sachs or McKinsey in private equity. And then I excuse my word by, those are the companies that I never want to work for. I don't like to work for big corporations any longer after Sumitomo. And I don't want to be the head of, like those big companies in Japan. And I like venture capital, like the way I like Alan. So we decided to discuss about the departure of Apax and GLOBIS. And late, like in December 2002, Apax and GLOBIS decided to amicably dissolve the joint venture effective of the next fundraising. That is how GLOBIS decided to focus on venture activities being independent. So GLOBIS raised 18 billion yen fund in 2006, $200 million, $180 million. And then, so that's how we have become independent. In 2022, we first closed Japanese yen, $500 million, Japanese yen 50 billion yen. The seventh fund and the largest ever. This was all because of Alan, who has taught us a lot. And so with that, I'd like to go on to the questions with Alan. I read the book in details, and that has given me lots of interest to ask several questions first. First is about how do you judge people? 1998 in April we met, and I was only 36 at that time, and I didn't have much track record. How could you decide to have a joint venture with such a young person like I? And that time you had a joint venture with CSK. Why did you decide to do that? And what was the trait that you see in people who you make decision?
First of all, I think I want to say you recounted our relationship superbly, and now you've embarrassed me that I didn't put your picture in instead of. I was looking for a picture to put in there from my time in Japan, and it's the only one I had of my own. And I should have gone further, so shame on me. I'll also say that look at the success of GLOBIS, and you can say that my judgment was obviously well chosen. I think that Yoshi, and I know you're asking this not to boost your ego, but to say how do you judge people? We really spent a lot of time, as you know. We hired someone who had a lot of experience, who spoke Japanese, an American, who went over to Japan and met with whatever firms that existed at that time. And we did our homework, and we met with 3 firms that we were talking to, that we were seriously considering. And frankly, the characteristics that you demonstrated then and show today by the way you built GLOBIS is, in the end of the day, it's instinct. It's, you're judging based on people's experience. You had the experience of obviously having been at Harvard, having worked at Sumitomo. We did our reference checking as to your reputation and the firm's reputation, and we recognized the industry was very, very young at the time, and it was very hard to find, as you know. It reminded me of what it was like in the United States in 1970. Very hard to find good opportunities. You couldn't put to work a lot of money. And as I recall, you had, I'm going back now, made 1 or 2 investments in the previous fund that were very impressive, that had done well. I can't remember the names, but remember better than I do. And you obviously had put a team together to start with. And I think Soichi was with you at that time, wasn't he?
That's right. That's right. He was the only associate. So 2 of us flew to New York.
Yeah. So we were betting on 2 people who, in a market we were not familiar with, which was a very high risk, and putting our reputation, whatever we had behind it, was really the important thing. I mean, Apax was building a reputation around the world at that time, and we couldn't afford to take a risk. We have since you split off from Apax, we have not gone back to Japan. It would be foolish. Apax couldn't compete in Japan with you, but we have opened up. Not we, because I'm not involved anymore. But Apax is in China and is in India, but pretty much the same in Europe and the United States. But Yoshi, also, as you, with a smile, we both can say the same thing, that Apax France is a very independent group, and Apax France is now the only one that is by itself. The rest of the world is all one firm. But listen, the proof, as we say in the United States, the proof is in the pudding. Here you are today, and I'm very proud of having made that decision, and proud of the success of GLOBIS.
Thank you, Alan. The company name is Works Application. They've done so well for our Apax GLOBIS Japan Fund as well. And so let me ask you the second question about the importance of your family. So the spouse, I also remember during the course that you really wanted to see my wife, Mizue, before you make a judgment. And how important is it for you to judge the spouses, and make any kind of decisions?
Well, I don't want to overdo it, but I think you learn. I don't want to let it go to your head, but you have an exceptionally fine wife. So it would be very hard to have said no after having met her. But and she is unique, I have to say, in wives, particularly giving you as many sons as you have. That's unique. But you meet people on Zooms, or you meet them in a business context, and you don't have the full flavor of what they're like. I always like to take a meal with somebody. Meeting their wives is another element of understanding, what kind of the dynamic of their home life, and what kind of spouse they've chosen. I mean, it's a very intangible thing, and I don't want to say we've done anything pro or con based on that, but I think it gives you a good sense of the individual you're dealing with.
Thank you. Third question is about 50 years of venture capital activities. During the 50 years, venture capital and startups have changed drastically in technology, business models, environments, economy, and globalization. Everything changed. However, you have been on the top of the venture capital industries. How do you learn and how do you unlearn to keep up to the current environment?
Well, it goes back to what I say. You have to keep apprised of everything that's going on. Whether it's crypto or NFTs or solar or space exploration. I mean, there's constantly something happening, which is what makes the industry exciting. Interestingly, Yoshi, I thought you were going to ask me to contrast what it was like when I started and what it's like now. I could almost ask you the same question of how it's changed in 25 years in Japan. But when we started here in 1970, we had to really, really work hard to find deals to invest in. It was not that far past World War II. Industries, it was still a pretty dull world, and technology companies were just evolving, and they were pretty much all concentrated on the West Coast, and I was in New York. And to give you a good idea, it's interesting and timely. I said earlier, I'm going to a birthday party tonight for the founder of the company that was the very first investment in Alan Patricof Associates, and it was in the secondary lead smelting business. I mean, today there is not a chance that you could send in a proposal to a venture capital firm and get financing for a metal smelting company. It just isn't. It's just not part of the world. But in those days, we had to go out and really find deals. And I found this guy who was going to buy a scrap operation in New Jersey, which was joining New York City, and he was all the characteristics that Yoshito Hori had. He was bright, he had a good experience in what he'd done. He was a dynamic individual. The reason I'm telling you this story is we financed him with $250,000. Also was insignificant in today's world. And his company today is the largest metal smelting company in the world, not in New York, not in the United States, in the world, and is worth several $1 billion. And it all started with our $250,000 investment in 1970. But we really had to make a lot of visits, a lot of calls proactively. Today, in Primetime Partners, which is 2 years old, we have received over 900 unsolicited proposals, and there isn't a day goes by that we don't see tons of them. In Greycroft, they virtually have 3 new companies proposing a week, and I'm sure you have a similar experience. When we started out in Japan, it was tough to find deals, deals certainly. And I think that the industry has changed. When I started in 1970, there wasn't even a venture capital industry. The association was started in 1973, and only individuals were allowed to invest in venture funds until 1976 or 1977, when the laws changed that enabled pension funds and other institutions, endowments, to invest in the venture capital fund. So in those days, maybe the industry was $60 million. Today, it's probably 600 billion. It's exponentially grown. So it's a whole different world today, and it attracts more experienced entrepreneurs with more skills, many of whom have been with previously backed venture firms and have learned what it takes to have a venture investor and the professionalism that's brought to the company when a venture capitalist invests. Not every business should have an investment from a venture capitalist. Some businesses are just not. Many businesses are not designed to have, all the elements that a venture capital investor will require in terms of legal or accounting and other kinds of discipline that and it may not have a broad enough opportunity. It may be more parochial, more narrowly focused. So the industry is today a very professional industry.
Let me follow up on that question. So what have you learned? What have you learned and during the courses to adjust yourself to the development of this venture capital industries?
Well, as I said earlier, one thing I've learned is not to be parochial and just think in terms of what my experience. And there's a great tendency in many deals to say, that's no good. I would never buy that, or I would never use that, or the opposite. I think it's terrific because I think it's, I've known 3 things that are just like it. So I think that not getting lost in your own vision is very important. I think that the judgment of what constitutes an address market. I think that people tend to be confused by what the market is and what the addressed market. The address market meaning, you can have a product that is applicable for the world, but what you're really addressing is a much narrower segment, and I think you can't lose sight of that. I think it's important to understand the mechanics of a business. I think a lot of younger people today start businesses that they don't really understand how to make a profit in the business. They just know they want to go into a particular business, and I don't think they have developed all the elements to understand that at the end of the day you have to have a profit. We're living, and I can't speak for Japan. You can comment after I make a comment of whether it's similar. But in the United States, most people in the venture business and most people in the startup area have not lived through multiple cycles. They've only lived with an up with the market going up, everything goes up to the right in a hockey stick, and it's very hard and as a result, valuations in the States have become extremely high and are in many cases totally unjustified. And I think there's a real right now there is a upheaval going on as people are getting back to understanding basics and understanding that at some point in a company's history, it has to make money. It just can't live on shareholders' constant reinvestment. That at some point, the shareholders will look and say, you know, where I don't want to use American expressions. We have several expressions for that, but you know, it's just, you got to show a bottom line at some point, and you can't just dream on the hereafter and just keep financing a dream.
So 50 years, you've seen up and down, boom and the bust of venture capital industries. I think it's the same in Japan. When the boom times, there are lots of newcomers come in, and the bust times, there are lots of people have to leave, forced to leave by the market. That's how, you know, the venture capital industries evolve. And then during the evolution of venture capital industries, the fund has become bigger, and the fund, like a vision fund, has been established, and the fund has become more institutionalized by having more, you know, hands-on investment professional team attached to it, a search firm, and also there's different funds being established. How do you think about that kind of evolution of venture capital industry? You remain as a very, you know, small, and then startup, you know, seed investment. How do you see the evolution, and what's going to be the future?
I think that's a very, very astute question. I think, you know, when the Vision Fund came in, and by the way, I think the Vision Fund had a big impact on what I was mentioning a little while ago. You know, when you come in with large amounts of capital, you've got to put that to work. It's very hard to do that with venture type deals. And so, and they're not the only one. There are many other firms today. And we have, in some respects, funds that are too much money in the venture world. And it just one goes with the other. If you have too much money, you got to put it to work. So in order to put it to work, valuations, entrepreneurs aren't stupid. They raise money at too high a valuation in order to satisfy the insatiable demands of firms similar to the Vision Fund. And I think that's contributed to the bigger funds, bigger investments, larger valuations. And I think we're going to have to, we will see, and we've seen, you know, several of these situations in the States. WeWork being a good example of irrational exuberance, to quote our former Treasury Secretary. There's a certain degree of over-investment, too high prices, and we're now seeing some readjustment. And I think that we'll have to go through this period, and you know, we'll get back to normal. At the same time, this is a good opportunity right now for smaller investments, and I think a lot of entrepreneurs are slowly realizing that reality is setting in, and valuations are settling down somewhat.
Okay, one last question from me. We talked about boom and the bust of industries, and also I'd like to talk about hype because of the buzzwords that we come up. Like we had seen hard disk drive coming hype and down. We've seen clean tech, and now we are seeing crypto and also Web3 and NFT. How do you see those Web3, crypto, and also NFT markets are going to evolve?
Well, the only contradiction I have that I admit to is when I tell you no red lights. If I were really sincere, I would be an expert in crypto and in NFTs because they are two of the hot new areas. But I decided 2 years ago that as much as I do everything that I've described, that I think in order to be in crypto and in order to be in NFTs, you really have to study and learn whole new industries. And I was not willing to make that effort and that commitment to start learning it anew. So I have to admit that I have not invested in crypto and I have not invested in NFTs. And I certainly have lost out in not riding the wave of crypto in the last couple of years. On the other hand, you see what's happening yourself to cryptocurrencies in general, and we're seeing a come to reality in that area. I do think the blockchain is now a fundamental part of the whole supply chain and is not going to go away. And I'm not an expert. I know very little, except I can't accept Bitcoins or cryptocurrency as being a medium, a store of value and a medium of exchange. I just don't buy it. But that's a personal opinion. I have no investment. I'm not short and I'm not long. In terms of NFTs, it's another art form. I think, again, when you see NFT selling for $63 million, it's a hard thing for me to adjust to, and I collect art, but I have not bought any NFTs yet. But you cite the two main areas of hype at the moment, and we've seen hype. The cycles in hype go up and down, and it's not an area I know anything about, and I am not participating.
Well, Alan, if you are interested, you always study. So if you say you don't know, that means you're not interested in. But anyway, what about metaverse and also Web3? You have no interest, or what about that?
Well, the metaverse. All I can tell you is that I invested, and I invested in 1984. I went to the Consumer Electronics Show. I did for many years, and went in the basement and I saw the first virtual reality company. It was called Virtual Reality Inc., and it was developed by a guy named Jaron Lanier, Lanier. He is now considered the father of virtual reality. He's an advisor to Microsoft. He's a professor. He's the genius in virtual reality. And all I can tell you is I found him in 1984. It's 2022, and virtual reality is now a business. I think the metaverse is here to stay. I think it's going to take more and more technological developments, but it's going to be a part of our lives. I think that's a much more solid, longer term area to be focused on.
When do you think that's going to happen? You waited for 16 plus 20, 38 years since you have made first investment.
I'll say that I think it's closer to reality now although in those days I thought we thought it was going to be the next year, but we made a $75,000 investment in this funny company, which started out with using gloves in their hands to manipulate, and today, I think there's a much more. It's a much more interesting. That is not hype, but I don't think it's going to happen overnight. But there is some applications, I think it's exciting.
Thank you, Alan. So let's open up for questions. So maybe Zach, you have the floor. You ask us
Yes.
questions.
Thank you very much. And a reminder to our audience, if you have any questions, please enter them in the Q&A function at the bottom of your screen. In order to get to as many questions as possible, I have read through them, and I will be combining multiple questions into one. Both President Hori and Mr. Patricof, feel free to answer with your experience. The first question I have is, how do you deal with transitionary periods of both your life, the market as well? How do you deal with things when they aren't so stable? How do you inform your portfolio managers, your internal team members? And how do you deal with failure in sometimes market downturns?
Well, I think we're going through a difficult period right now. And I think the job of a venture capitalist is really to keep their companies alive and survive for the next round. I mean, the most important thing is to be here when the market turns around. And so we stay very close with our companies. We try to make sure that they're well financed. I mean, before we would have said you should have 12 to 18 months of cash. We now say you should have 18 to 24 months. This is a good opportunity to get rid of, I say get rid of is a hard word, but to let the marginal employees that you may have taken on in a more exuberant time to let them go and upgrade the quality. It's at the same time you're able, on a positive side, to take advantage of gaining market share. If you happen to have the capital and you have the team, this is a time when you can take business from your competitors who may not be as strong as you are, and it's a time to gain share of market, I think, and also to attract people to join your firm if you is strong enough. So the strong will survive and come out even stronger, and the weak will be, through natural selection. And I think our job is just to coach and to hold people's hands and provide whatever help we can to make sure they get through this. And in terms of my own life in transition, I've told you about 2 or 3 times of transition in my life, and I don't know what more I can add to it. Yoshi, you have any comment?
Well, from now on, I like that. Lots of people want to ask you questions. They can ask me lots of questions, in the different occasions. So let's go on for other questions, Zach.
Excellent. So I think one part of that question that was maybe left off a little bit, in venture capital and investing, not all predictions are winners, as you've kind of mentioned. But how do you personally deal with kind of those failed predictions or failed investments, either on a professional or personal level?
As I've said, failure is part of this business. I think the one big error people make is that they don't equate potential risk with potential reward. By that I mean they will invest. And let me expand on that answer. They will make an investment, and initially it's a very high risk situation, and they will think they're going to get 20 times on their investment, and that justifies taking the risk to make the investment at the early stage. And at the end of their ownership, and they sell it, and they make 2 times on their investment, not 20. It's that what it says to me is they took a risk that was not in relationship to what the reward was. Now, you'll hear someone say, well, I brag about the fact that they made 2 times on their investment, but the real fact is that they exposed themselves to a risk that was out of proportion to the reward. And I think in looking at investments, it's very important to be very honest with yourself as to what risk you're taking and whether there is a potential reward that justifies that risk. And if it doesn't, I wouldn't make the investment. And that's as a company gets later along in its history and its activities, you can afford to accept a lower rate of return because the risk is less. And I think it's important to measure risk versus reward. And it's also important at the end of the cycle of ownership to say, did you take an excessive risk in relation to the reward you got? And that's a way of disciplining yourself.
Thank you. A little bit on the same topic. This idea of kind of balancing risk versus reward is some type of framework that you've developed for yourself and your firm, over many years. And as a venture capitalist, you can kind of base your movements on past experience, but we know the market and industries are always changing. So how do you adapt, or how do you unlearn things in order to ensure future success?
I don't think you necessarily, I'm trying to unlearn. I think, as I said earlier, everything is cumulative. I mean, your learning experiences, your pattern recognition of having seen something before in some form provides the background for making, current and future investments. So I don't, you usually talk about unlearning bad habits. And I think the only bad habit is paying too much for companies and not getting the return that you should have gotten. And so that's one bad habit that I think is something that a lot of venture capitalists suffer from, and all of us, me too. And you got to keep reminding yourself of what kind of risk you're taking, and bad habits, and maybe are in bad judgment of people and not recognizing certain traits, paranoia being one, the entrepreneurs that don't take advice. You didn't ask enough questions in the beginning to determine that the entrepreneur you were backing is not open to change, is too rigid. And the other bad habit perhaps is not doing your homework. The last reference call, the last investigation you make is, I always feel, is the most important one. So don't stop before you finish doing all the references and industry analysis that you set out to do.
Alan, Mizu is back. She wants to say hello.
Hi, Alan. It was
I'm glad you made it to Boston and back home.
Thank you very much. Thank you.
So she just came back, so she wants to say hello to you. Thank you for your ride from New York to Boston. So let's go on to Zach.
Yes, thank you. So you talked a little bit about, maybe kind of judging the kind of entrepreneur for their personality, doing your homework and things like that. We have a lot of people in the chat who I think are up and coming venture capitalists, or people who want to get into investing in things like that. So what are some other things that you would kind of list as minimum requirements to kind of enter into this industry? And what are some other key factors that are maybe a little less uncommon, other than financials, that you kind of look for when you're investing in companies?
You mixed. Are you talking about entrepreneurs? Or are you talking about venture capitalists?
Let's talk about venture capitalists.
Yeah. Well, I've said to you, I mean, I think a basic characteristic of a venture capitalist has to start out with an inherent curiosity. Someone who is just doesn't see the world with through glasses that are open, exciting and see opportunities. I just don't think should be in the business there. That it's the wrong business. Unfortunately, venture investing does not require as much financial. You have to have financial tools, but it doesn't require as much financial analysis because there are numbers to analyze. If you're in early stage companies, everything is hypothetical. You're really dealing with understanding market sizes. I think I've covered a lot of the things that you. Yoshi used one of my favorite expressions, which is meticulous attention to details. I think that someone who's really careful in what they're doing and in their analysis and I think that one of the problems that I give lectures at business schools for every once in a while, and I got in the habit of saying, how many of you want to start your own business? And I don't know, I can't say for 2022 because I haven't done it this year, but certainly before that, 3/4 of the classes in the United States would raise their hand and they're going to start a business who have had no experience and have the only reason they want to start a business is because they saw someone else in a previous class who started a business and made a lot of money, and they want to do something. And as a result, you have 50 companies, startups in the United States that are dog walkers, and you have 100 companies that are delivery companies. And there tends to be a repetition of and not as much originality or passion on the part of entrepreneurs and startups today. And I mean, I've shifted from venture to startup, but to entrepreneurs. But an entrepreneur should have, I would hope, a passion and some relevant experience. There's nothing wrong with taking a job in a big firm, or even taking a job in a small firm and learning from someone who can teach you. I mean, getting a mentor in a job is a very important, nothing wrong. But instead of starting a company, going into a startup with someone who's really talented and learn and watch how they do it and build the credentials to start your own thing at some time. So, and I think there's nothing wrong with going to work for a major company and seeing how they got to be a major company, and at the right time, then move on to do something on your own because of an opportunity that you found while you were doing it.
Thank you very much. You also happened to answer some of the follow-up questions about the entrepreneurial side as well. Since you kind of brought it up, there are some questions. I'm not sure your familiarity with the Japanese startup market, but how would you view the Japanese startup market versus the US as a venture capitalist?
I honestly am not experienced. I have no experience in the Japanese market recently. I will say this, that there aren't a lot of Japanese companies that come to the US looking for capital. That I can tell you. I mean, I haven't. We've seen them from China. We've seen them from India. We've seen them from Africa, as I said, Middle East. I have not seen one company from Japan in Primetime, and I didn't see one during the 15 years at Greycroft. I can't speak for Apax. I don't know. I think it'd be more likely that Apax would, because they'd be investing in the later stage deals, and I'm sure there's more later stage looking for capital in the States. But I think that there obviously is a venture community in Japan that is satisfying the needs of entrepreneurs. And I think investors in the States who want to invest in Japan are investing through funds like GLOBIS and are not going direct. that would be my impression. I don't know. Yoshi, you know much better. What's the answer to the question?
Well, thanks to you and thanks to your efforts, Japanese venture capital community has evolved so drastically in the past 20 years. And there are companies like Mercari and Smart News who have entered the US market and trying to become number one in the US market. And there's a strong aspiration to become global number one from the startups of Japan. And the quality of entrepreneurs have become much better. Even my first son, who is now in Tokyo University, is a CTO of a startup company in AI. And nobody in that same class wants to work for big corporations. So, best and brightest are now rushing to become entrepreneur and with a strong technology base. And then the community in terms of angel investors and venture capital and professionals are around, like lawyers and accountants and the market maker and also security companies. So the evolution has become much bigger. And however, there's a disadvantage, maybe advantage in Japan is that the language of English is difficult, so it's not easy for us to go to the US. And also, the Japanese market itself is big enough so that not unlike Israel, where the domestic market is small, we have a lot to do in Japanese domestic market. And however, the evolution of Japanese venture capital industries have been tremendous, thanks to your input in 1992, 1999 to 2006. Okay, let's go on, Zach. How much time do we have left?
We have about 15 minutes left for this seminar, so we'll ask another couple questions and maybe leave a little bit of time at the end for closing statements from both of you. I'm continuing on a little bit different of a topic. So you talked a little bit in your keynote about 50s and 60s now being the new kind of middle age in your career. So how do you view education, in particular lifelong learning, for senior citizens as a natural extension for building a good life or kind of reactivating the ageless generation?
Thank you for that question. I think that is absolutely right on the mark.
That was from Daniel, one of our students.
Well, I think that the opportunities, people are going to, a venture capitalist may decide to become a lawyer at age 50. A lawyer maybe decide to become a pilot. I don't know if that's possible, but I know people who've gone to medical school in their late 40s. I think that lifelong learning is different. It's the same thing, but it's different. I think deciding to do something different and re-educating yourself in a new career is definitely going to happen. As people are going to live longer, they're going to want to fulfill dreams. They've always wanted to do something. I always wanted to be to be an actor. I've always wanted to be a musician. I wanted to I don't know, to build houses. People have had frustrations of things they wanted to do because they've been stuck in one career, but with retirement plans and other sources of capital and accumulation of capital, people will have more flexibility, and we're going to have more activities. If someone's going to live to be 100 years old, they can't retire at 60 and spend 40 years doing nothing. So I think that further learning is very important.
Thank you very much. I think this question is kind of to both of you, but as we go through different transitional periods, ups and downs, as leaders, how do you manage the morale of your staff and the people around you?
Well, that's, particularly in the pandemic period, that's become very, very important. This gets in a whole other discussion about, COVID and what its implications are. I am very disappointed by the fact that today people are living on Zooms. Now, in this particular instance, it's a great advantage because I'm not in Japan, and it would be harder for me to get there now, to come there. But in general, there is so much to gain by communities, by being in an office environment and exchanging ideas and coming up with new concepts and talking to potential people you can learn from, and also your compatriots, your people at the same level you're at, and exchanging ideas. And I think I'm very sad about that. I think that I'm only speaking for the US, but I assume it's similar in Japan. I mean, offices are half empty. People come in 2 days a week, 3 days a week, some not at all. And particularly at the younger stage, in their 20s, they're missing an awful lot. And I don't know how that's going to get replaced. So the challenge of any business today is to keep the morale up over Zoom, to come up with concepts to build that feeling of togetherness in a virtual environment. And it's a big challenge. And I think you've got to still bring people together in some fashion. You know, I can speak for Greycroft. They've hired 30 people in the last year, and I would say that most people don't know them. They've never met them. And that's a big challenge to get over. And I can say, in fact, for Greycroft, and I don't take the credit for it, my two successors really deserve the credit. They have worked very, very, very hard to build an identity for the firm, build a culture of people, even in a remote sense, feeling they're part of the organization. And it gets down actually to a lot of activities that they've done and initiated, whether it's something they call cycles for survival, which is a cancer raising money through people on their Pelotons racing together, or whether it's getting in a group meeting, or whether it's building up charitable activities to get them to work together, and some outside activities. But I think you have to be very, very creative today, and to hold the organization, to make them feel they have allegiance to the business they're in, and not, you know, that they're tied to the company, and they have to feel proud of what the company is doing in this environment. And I think today also in the United States, I don't want to speak for Japan, we have this DEI, which is diversity and environmental emphasis, and that plays a very big role, that young people want to be involved in companies that are showing that they're very open-minded about diversity, and that they're doing things to help the environment. And there is a lot of social consciousness today in the States that are making younger people attracted to one business or another.
Thank you very much. I actually think GLOBIS is hosting a DEI seminar next week on July 12th. A little bit of a plug there. But President Hori,
that's very important. It shows forward thinking, and that's critical today. And young people want to be involved with companies who do things like that.
Yeah, excellent point. Excellent point. President Hori, from a Japanese perspective, how do you view keeping up morale?
Well, the role of the leaders are to communicate vision and energize people and keep discipline of the organization that you are leading. And at the same time, communicating shared vision and mission and value. And that's what you have to do. Uptime and also downtime, that's all you have to do. And the downtime, you have to be more visible. You have to communicate more. And in terms of crisis, you have to make much more decision in a shorter period of time. and then you have to do it all over in repetition and try to manage the company to good directions. That's all you have to do.
Thank you very much. And that is all of our time for questions today.
Oh, okay.
So we have only about 5 minutes left. So if we would, maybe we can hear some last words from both Alan and Yoshi, and then we'll close tonight's seminar.
Okay, Alan, please go ahead.
Well, I'll shamelessly recommend, and Yoshi's been very good about it. I hope you'll all buy the book. You can buy it at Amazon.com, and the book is for sale there. But I really have enjoyed this, as I have all of my interaction in Japan, and sadly not enough in recent years. But I think, I'm proud of the fact that I got involved with Yoshi when I did, as evidenced by the growth of the firm and the growth of the industry in Japan itself. And I think that it's the venture industry clearly in Japan has now blossomed, and the United States it's stronger than ever. And as I say, it's a trend around the world. Entrepreneurism, startups have never been stronger, which is a very positive sign for the economy. I remember when we started in the UK, particularly. It's interesting. That was in 1981, and you couldn't entice a leader of a company to leave the company and start. You couldn't convince him to start a business on his own because of taking risk was not part of the society. Everybody had good jobs with long careers. They never got fired. They had drivers with cars, and it was a very complacent environment. It took many, many, many years, and I don't think today it's certainly much, much better in Europe. And that's the thing that distinguished the US. We've always been a very high risk-taking economy, and part of it is because their rewards are very great. And we have a public stock market, we have an active M&A market, and there is a way of realizing a profit. And I think Japan seems to be headed in the right direction, if not there already, where you've got a market, an active stock market, you've got investors, you've got startups. So it's very encouraging to see how the industry has evolved in Japan, and I'd be optimistic about the future.
Okay, thank you very much, Alan. And thank you very much for the great book of No Red Light. I encourage all of you to read this book because this is very, very interesting, insightful, and will give you some of the lessons that you'll have, the lessons that will benefit you whenever you encounter any kind of difficulties in your business life and also your personal lives. So I encourage you to read No Red Lights. Having said that, looking back in 1998, I first met Alan in April in New York, in Park Avenue office. And then, since then, I have learned a lot. I started GLOBIS in 1992. I started GLOBIS Capital Partners in 1996. And then until then, I did not learn anything from anybody of venture capital. So I tried to find out what to do in terms of investment. But since I met Alan, I have learned a lot. He came to Japan, and he has been sitting on all the investment committees. Therefore, we can kind of tell about what kind of criteria we need to, what kind of deep analysis and also due diligence we have to go through, and what kind of communication we have to do to entrepreneurs, and what kind of conditions we should go into deals. And that has been quite helpful. So looking back, Apax GLOBIS Partners is all about Alan and myself in terms of partnership. So when Alan leaves, I decide to leave. And then since then, still, like, Alan has been a good friend of mine. And when I look at the age of Alan, I realize that Alan's age is my mother's age. My mom and dad are still alive, so so Alan met my that as well. And then so, I hope that, Alan said that he will live until 114 years of age. I hope that will be true. And then I hope we will have chances again to have this kind of dialogue, which would be strongly beneficial, having had more than 50 years of history in venture capital, founding venture capital industries in East Coast, and also learning about the wisdom and insight from Alan has been quite inspirational. So thank you very much, Alan. And thank you very much all for attending. No red lights. Thank you.
Thank you all very much.
Yes, thank you all very much to Alan and President Hori, two defining players in the venture capital industry and GLOBIS University's history.